Welcome back, everybody. Money Mondays here with your host, Ben Suttles and Ferris Musa, and we are Disrupt Equity.
Every Monday, 3:30 Central, we are here to help talk about all sorts of lovely topics. If you have ideas for future ones, please go ahead and send them our way. We're always looking for ideas. But this week, what are we talking about, Ben?
Oh my gosh, identifying great real estate markets. I'm going to tell you, there's still some out there.
There's still a lot of them out there, right? Like we like to say, real estate is cyclical. So there may be good markets and bad markets at the same time. And guess what? That's A-okay.
So let's talk about some of the markets that we like. Actually, no, let's talk about some of the markets that we don't like and why. Right? I'm going to start off with a little bit of a contrarian look on this thing.
Any market Ben has lived in probably has gone backwards. No, I'm just joking. Unfortunately, we've lived in the same cities.
No, I think so. Let's take a map.
Talk about what do we look for in a market first, and then talk about why do we not
maybe
like
some of them aren't going to have these things, right? So, we've talked about this ad nauseum on this show, folks. So if you don't know these things already, you're either not paying attention or this is your first time watching, right? So we're looking for population growth, right? People are moving to these areas, right? You're looking at job growth. Businesses are moving to these areas or they're being created by the population, right? Landlord friendly, right? We care about our tenants. Our tenants are part of our family too, but you want landlord states, right? That have rights and, are more landlord friendly than tenant friendly states. And I'm going to kind of get into the difference between the two here in a minute. Tax friendly, right? We just like tax friendly states. We like low taxes. That's not a problem. Typically, business owners are like that, right? And then I'm just going to say business friendly, right? Because taxes and business is two different things, right? Is it easy to conduct businesses or business in particular cities? And I'll give you an example, right? And this is with Atlanta. So not all boxes have to be checked, right? But Atlanta checks most of the boxes. But Atlanta's comprised of, I think, 6 or 7 counties, right? And each county has its own way of doing business, its own rules and regulations, its own inspection squads, and they make it very, very difficult sometimes to do business, right? That doesn't mean that Atlanta doesn't have great population job growth, and for the most part, it's fairly landlord friendly in some of those counties. But overall, they can make it really, really difficult. Austin's another one, right? You just have to know what you're doing in these markets and how to kind of play the system, right? But that doesn't mean that they're not bad markets, right? Doesn't mean that they're bad markets. Yeah. But
so really quick to recap, right? What are we looking for? Job growth, population growth, right? And kind of those are tied to business growth, right? Landlord friendly. And the thing that Ben kind of said but didn't say is really looking for market expertise and relationships, right?
Yes.
So it doesn't mean that we have to be experts in there, but at least you have a good segue into getting into market, understanding some of the nuances that matter in that market, right?
No, I think that's important, right? And maybe even another thing too, to take it one step further. So not only market knowledge, either boots on the ground or good vendors out there, but it's also nice to kind of be in markets that have a good talent pool too, right? We used to invest quite a bit in Beaumont. We love Beaumont. Beaumont had a lot of great things going for it. But the talent pool in that market was very, very shallow, right? So trying to find new managers or trying to find a vendor for this was very, very difficult. And in a lot of ways, we had to shuffle people in from Houston because it was so hard to find somebody there locally. You got to take that into consideration. You can have the best property. You got it at $10,000 a door. It's a 20 cap. It doesn't matter if you don't have anybody that manages it or can maintain it or is a good vendor to turn units, right? At the end of the day, you're still going to have trouble. And that's the reason why I was selling it at a 20 cap in the first place, right? So something to think about too, right? And that all probably boils down to having good relationships in that market.
Completely agree.
So those are some of the criteria of what we're looking for when we're looking at markets,
so
right?
Before we say markets we like, what are the ones we don't like, right? And why?
All right. So I'm going to pick on, we have a lot of California investors and we have a lot of New York investors, right? But typically,
I love markets where the government controls who I can evict and how I can evict.
Rent control is not a good thing, folks. And both of those markets are either already doing that in some way, shape, or form or trying to enact that. Yeah. That's a bad thing.
And I think we understand the concept of it and why governments push for it. I think just typically it's the way it's implemented kind of doesn't really result in what they're trying to
No,
accomplish.
no. It's
So.
like anything else. The government always has these grandiose, benevolent ideas. It's the rollout that's typically just mucked up. And it was the same thing with rental relief, right? Like we understood, COVID resulted in certain people, losing their job or not having a place to go work. And that resulted in people not being able to pay their rent. But the rental relief was completely mucked up. It was rolled out way too late in the game. By that point, people had already been emboldened not to pay their rent. And the whole rental relief process was I hate to say it was a shit show. But that's just what government is, right? So whenever you get government involved in a free market, which is essentially what rents are, right? We're not forcing a gun to anybody's head to sign a lease. This is just based on where the market's at. They should stay out of it, right? But that's not necessarily the only reason why I don't like California and New York, right? I think it's more so just tax and just not being very business friendly, right? You hear every day, at least here in Texas, about another company moving from California to Texas. And vice versa, even from New York to Texas, right? Goldman Sachs is setting up a huge shop in DFW that we hear, right? But my point is that there's a reason why people are moving away from those states, right? And typically the two major reasons why is taxes and not business-friendly climates, right? And so you want to doesn't mean that you can't make money. Obviously there's fortunes to be made in California and Manhattan. Hell, look at all the people, Trump was one of them, along with a lot of other people that have made a ton of money in Manhattan. But point is that that's not what we're looking for. We're looking for a component of cash flow. We're looking for, not necessarily just an appreciation play, which is essentially what you're doing, right? So we try to stay away from the coast. So think West Coast, then kind of that Northeast corridor, kind of call it from DC up to New York, up through Boston, right? None of those areas are typically anything that I want to be a part of. Now there's some places that are maybe within even those same states that might be a little bit better, but in those major metros, I'm staying away from. I typically don't like super hot markets that are also based on appreciation. I don't like Miami.
It's kind of, we like
Phoenix kind of feels a little hot,
it feels like it just booms. It's a booming, a little boom.
So Phoenix.
And again, we like Phoenix, but also that's just a concern in the back of our head.
Yes. So, and I would say same thing with Vegas too, right? Some of these markets just got crushed during the Great Recession, right? And then Miami too. There's no cash flow in Miami. It's just all very speculative money from Latin America.
There's a lot of cash flow in my cool points though.
Who wouldn't love to have great deals in Miami? We love Miami as a city. Don't get me wrong, folks. I would love to go visit California.
Investors
New York.
are gonna love. Why did you guys do a trip to Miami every 3 weeks to visit the property?
I don't know. We had to keep a close eye on it. Yeah. But point is, right, is that those markets don't have cash flow. And we don't want to pay, we don't want to come out of pocket to pay the note just to support the hope that we can potentially sell it to some sucker down the road in 2, 3, 5 years down the road. And that's where that's what investing for a lot of people in those markets is. It's very speculative. That's not real estate investing. That's speculative investing. Right? And that's not what we're looking to do. So those are kind of some of the markets that we don't typically like. Some of the markets that we do like, right? Sunbelt. We talked about this on the show quite a few times. And people are like, what is Sunbelt? Well, it's typically anywhere from Arizona. You call New Mexico as part of the Sunbelt, Texas. We typically skip over to Louisiana, certain reasons why. Obviously
Alabama's kind of in, kind of out.
Yeah, Alabama, Mississippi is kind of a little bit of we like, a little bit we don't.
Like an oasis, not an oasis, a desert, maybe between two valleys.
Yeah, and then again, we like Florida, but I don't like South Florida, right? And then you go into Georgia, and then you go into the North Carolina. Typically, that's also going to be inclusive of kind of call it Tennessee as well, right? It is kind of what we consider Sunbelt. All those markets, now not every single sub-market within those is good, but overall, generally, we love every single one of those, right? We also like parts
growth,
of the
retirement, people, job growth, businesses moving, all of the things that we look for, right? And thankfully, fairly landlord friendly. So.
Yeah. And for the most part, pricing isn't all that bad either, right? You put the same price, or you say the same property in Texas and say California, same property in Texas and New York, it's going to be 5x what it is. So pricing is still relatively, from a basis standpoint, feels really, really good. And you're going to get a lot more rent growth, right? And over a longer period of time. And let's just be honest, you look at any statistic on Texas, and it's got the highest population growth of the last decade, and it's going to have the highest population growth in the next decade. You just can't fight against those types of stats. It is what it is. You like blue wave? Was it, you want to go with some of these good things, these good headwinds or, winds behind you, whatever. You get what I'm saying, right? Point is that you're looking for these types of things to be successful. If you go against the grain and say, well, I'm going to invest in California, just know that maybe you can make some money, but you potentially could have some risks there too, right? So those are the markets that we don't like. Those are the markets that we do. Those are the reasons why, right? But I want you to drop your reasons why, right? Why do you like certain markets? Why don't you? We've had another gentleman last week or 2 weeks ago was talking about the Midwest, and it was the best thing since sliced bread. We like the Midwest too. It's more of a cash flow market, less appreciation. But I mean, if the numbers that he was saying were correct, he was getting a pretty good deal.
I agree.
We like, Columbus, Ohio, and some of these other markets too.
Yeah. Indianapolis is up there.
Indianapolis, right?
Again, you're looking for price points too, right? Like, why did we go to Atlanta 4 years ago? The pricing made sense.
We bought stuff in the 30s a door, folks. Look at Atlanta now. You ain't getting anything in the 30s.
We'll buy stuff in the 30s all day if you guys have it.
What do you got? 10 caps? Come on.
Yeah. So if you have comments, questions, please leave them. We will answer them here live on Money Mondays.
So, I mean, there's some questions that came in. So, are there any warning signs investors should look out for when picking a market for real estate investment? I think it's some of those same things, right?
Boom and bust. I mean, if you see way too fast of an appreciation, you probably are just likely.
I like the boom and bust because let's talk about some of the oil markets here in Texas, right? So, some of the markets that we've stayed away from is kind of like a Midland, Odessa.
It's funny. Once oil got up, what happened, Ben? Our inbox got flooded with every deal in Midland, Odessa.
It was just they're just dumping everybody that had owned stuff or got whacked just started dumping their stuff on the market because they're trying to get out of Midland, Odessa. Doesn't mean that you can't make money out there, right? But it's, again, you have to hit it at the right time. And that's just not the type of investors we are, folks. I don't want to time the market. But yeah, boom and bust towns, towns that are just tied to one industry is very problematic. And that's what Midland, Odessa is. It's very tied to oil and gas. And that was a big problem for us. And that's why we've always stayed away from it, even though, again, it checks all the boxes of being in Texas.
Yep.
Are there any tools you can use to analyze markets? We used city-data.com. CoStar has a lot of good information. Axiometrics has a lot of good information. Obviously, CoStar and Axiometrics you got to pay for, right? But if you really want to take this far in this industry, folks, you got to start getting some good data, right? You can't just be like, well, what market do I want to invest in? Or I found a 10 cap, but it's in the middle of nowhere, right? And so you think that you got the best deal ever, but the reason it's a 10 cap, folks, is because it's in the middle of nowhere. You need to be basing your buy decisions on good data.
11 cap would have been the deal. 10 cap, not a 10.
Maybe if you had 11.
Yeah.
Right?
So let's see a couple comments and questions that came in. Tim says, leave it to the government to implement something properly. He also said Carolina's growth as well. Apple, Microsoft, Meta, etc. True.
Yeah,
right.
absolutely.
It's got its own little mini tech hub, right? Same thing with Austin. I mean, there's a reason we like Austin.
Yeah. Follow the headlines, right? It's, again, the Carolinas have a lot of good...
When it comes to investing, don't be the, what's the word? Person that's opposite the norm.
The contrarian?
Don't be the contrarian, right?
I think some people will try to pride themselves on doing that, but why go against the grain, right? If you're seeing a ton of news articles about, and I'm picking on Austin because we love it, right? Of things and people and businesses moving to Austin, why would you go against that and say, oh, Austin sucks? Of course, it's not great on some respects, but it's got a lot of those boxes that are checked, right?
Completely agree. Let's see, a couple more. So Jay says, how about Houston? We love Houston. We're buying in Houston. We're buying a deal right now in Houston. We live in Houston. We manage in Houston. So Houston's got a lot of those things.
We love the major metros in Texas, right? We love Houston. We love DFW. We love San Antonio. And we love Austin. Right, and I couldn't even. They're hard to even say which one's the best. I think they all have great attributes. Like Houston, and hopefully I'm not shooting myself in the foot here by kind of letting the cat out of the bag. But from a basis perspective, Houston is the best in the whole entire state, right? And it's still you're seeing a tremendous amount of rent growth, and you have more population growth. I think in the next 5 years than maybe even DFW. Or maybe it's right behind DFW.
Totally agree.
So something to think about.
So let's keep going. So, a few more comments, questions. Tim says, got to think about your exits. Buying at a 10 cap because no one else wants to buy it will be very difficult for you to exit when balloon is due.
Yeah, that's my whole point, right? There's a reason why it's a 10 cap, right? But people get so caught up on the going in cap rate that they think that they've gotten a good deal. But the reason they got it a good deal is because it was a crappy deal in the first place, or it was in a crappy area.
Yeah. All right, let's keep going.
All right.
Next
all right.
question. No, one more. Sorry.
Oh.
Amanda says, what do you look for at a submarket and neighborhood level? And this is a good question.
This is a good question.
We've all heard location. And we've done deals in not so great locations, and we've done deals.
They were transitioning areas.
Yeah, and we've done deals in better locations. And it's not that one is right or wrong, but I think as we've matured, we will step up and pay more for the better location, cleaner asset, because getting Ben a hair transplant is not that cheap. It's very stressful. These deals,
you couldn't do a Money Mondays without the hair joke. Come on.
You can make money in the poor locations and the best, but just know the level of effort is higher, the risk is higher.
Risk-adjusted returns.
Yeah, and so as we've matured in our business, right, we're looking for more down the middle. We don't need the grand slams.
Yeah.
We're looking for safe, straightforward investments that we can execute. And, if we can find a grand slam, great, but it needs to be a real grand slam. And so, that's maybe what I'll say on that topic. Anything else to add?
I was just going to say, I can make any property look beautiful. I can't make every neighborhood look beautiful, right? So you're investing in the property. It needs to be in a good area or an area that is getting better, right? Because it's very hard for you to effectuate change in a sub-market just because you came in and put a couple $1,000,000 into your property. Now, the hope is that your next door neighbor decides to sell, and he sells it to another guy or gal that then updates their property, and we have seen that in certain pockets, but that doesn't always happen. You might come in and be the best thing on the whole entire block, but the whole entire block's just garbage, right? And so nobody ever goes down that block because it's got a bad reputation, so it doesn't really matter what you did, right? So invest into good or getting better markets. And really, again, go with some wind at your sails, folks, right? Don't be a contrarian when it comes to this. Oh, I'm gonna come into this rough neighborhood and I'm gonna clean up this area and this whole thing. You're not a developer with deep pockets, right? You're starting off. Do what everybody else is doing. Go into areas where other people are already being, kind of forward thinking about, investing in their projects, investing in their properties, and updating them, and just go with what's happening, what's already being done, right? Because they're probably already all ships rise with the tides in terms of rents too, right? So something to think about, right? Boom. Any more Q&A?
Let's see. Let's keep going. If you have comments, questions, please ask it. But otherwise, I think just keep going. Nothing else new. So.
Nothing else new. Everybody knows about the real estate markets. Okay. All right. Fair enough. Well,
I think any other big nuggets that we have. I mean, we've seen it and done it all. It's about how much work do you want to do, folks, and how much risk do you want to take.
And I'd say the other thing to kind of take into consideration is natural disasters, right? Know the markets that you're getting into. I mean, we know a fair amount about that in Texas, but, in our defense, there's natural disasters in every state in the whole entire union. So, California has wildfires and earthquakes and, there's other things that happen, right? But know that, hey, you're investing in Houston. Houston's a great city, but there's going to be obviously flood components. So you have to know within those, what is the most advantageous place within that submarket for you to invest, right? Another thing that I also take into consideration is, if you invest in the north, there's winter for 4 to 6 months, right? And do you know how to keep up with your property when it's cold? I know I don't. I don't have any snow down here, right? We live in Texas. So I wouldn't know the first thing about that. And I know that there's some rent restrictions about putting people out during the winter months too. So you need to take that into consideration too. So those are probably some additional tidbits. Again, if one of those boxes doesn't get checked, does not mean it's a bad submarket. It's just something to think about, right? All of these things need to be taken into consideration.
Let's see. Keep going. If you have comments, questions, please ask them. We will answer them live. One more that just came in. Greg Lee says, congratulations on the Inc. 5000 ranking.
Thanks, buddy.
Thank you very much. We're excited about that. Landed #1 fastest growing company in Houston. I'm surprised about.
Yeah.
But I'll take it.
I'll take it.
Ben losing that hair was worth it. So
174 out of 5,000 too, which we were really, really blessed and excited to have. But
wouldn't have been able to do that with an awesome team. So it's all about
true.
people. Location, people. Those two things will get you far in real estate.
I like it. All right, so coming up, our next meetup. I can't believe it's already that time. When is that? That's next week.
Next Thursday.
Oh my gosh, September 1st. Can't believe
If
it's
you're
already
here in
September.
Houston, or if you're here anywhere in Texas, get down here. It's going to be
Yeah.
fun. A lot of cool people. Should be 150, 200 people probably.
Yeah, we're doing a new meetup venue.
Much bigger venue.
So Wakefield Crowbar, check it out, disruptequity.com/HTX meetup. Go ahead and register there. We're gonna have a huge just kind of kickoff for a new meetup venue. You know, open Q&A, open networking. We might have some food out there. Who knows? We're gonna get crazy with it. You know, and it is sponsored by our friends over at Newmark. So really, really excited about that. New venue,
Awesome.
new time of the month. Not really a new time of the month, but you know, it's a new month, right?
Hey,
It's
no
September
shame.
1st, so check it out. All right, what else? Oh my gosh, well, we're giving away MFIN tickets.
MF Investor Network, our awesome conference, coming on up
Gosh, Shannon
Soon.
never lets us make any money on this
in
stuff.
November, November 12th. The sale
Sale
ends
ends Friday.
on Friday.
Okay.
So
Prices will rise.
prices will
Oh my
rise.
gosh, and when
And
she says that means it's really happening too.
Shanna collects, she collects. She'll be
All
knocking
right.
at your door. So,
So check it out. I want you guys to come out to Atlanta. It's a great place, cheap flights. It's the biggest.
we'll make sure you guys some of our properties. We'll make some cool projects. Stay
Oh,
tuned
yeah.
on that. So
We
nothing
do-
formalized
we,
yet.
We do
but
own some stuff out there. We'll try to see if we can get something out there. But November 12th, 2022, this year, Atlanta, Georgia. Check it out, mfinvestornetwork.com. Put in early bird at the checkout and get your $150 off tickets. That ends August 26th, folks. Right? So get that. We're going to have some great speakers, great panels, and ultimately always some great networking, right?
Awesome.
But what's coming up next week, my friend?
how to create a multifamily rehab strategy. What do? We do value add and inject capital into these assets. So
We're only doing like $10 million in rehab
only,
right now.
yeah.
So, you know, I mean, we know a little bit about rehab. So if you guys want, throw us some questions ahead of time. We'll go over them on the show. If not, we will see you then next Monday, 3:30-ish Central.
awesome.